Thank you, and good afternoon, and thanks to Arthur and the team for this opportunity to speak. This will be an eagle-eye view. It's difficult to pack so much into 10 minutes, but I'll try and give you an eagle-eye view of both the global gold market and the mega trends over the last few decades.
Sorry, don't want to confuse you.
It's okay. And where Russia currently fits in terms of gold market development. Given the time, I won't bother saying who we are or what we do. Please feel free to come and capture me later. So this is basically what I'm talking about, in not necessarily in this order. I'm looking at 30 years of gold, because 30 years, the World Gold Council happens to be 31 years old, and we took stock in terms of where we were, or where the gold market was when we were formed, and where we are now. And I think key to that is basically the fact we would argue that the modern gold market is not the market it was in previous decades. Basically, from the new millennia, the gold market evolved rapidly. The question, to some extent, is did Russia's gold market? So, gold market the gold market in 1987. I won't read through all the bullet points. You'll be pleased to know. It was a smaller market. It was a more concentrated market. It was a market that was rooted in jewelry. It was a market that was rooted in fabrication in the West. It was relatively inaccessible. So in several countries, gold ownership was either illegal or regulated. The price was either, shall we say, heavily regulated. I was going to say fixed, but what I really mean by that is that governments had a major say in what the current trading of gold was, or the price of gold was. So it was also a relatively, I'd argue, untrusted market, a market that was inaccessible and not necessarily trusted. So we fast forward to today, and you'll see, I'd argue that the gold market has grown considerably, and it is far more diverse, and that is very, very key in terms of how gold is perceived as a modern asset, and in terms of the robustness of the market. To some extent, it's better understood and more trusted. I think there's still major challenges there, but certainly we moved a long way. One of the ways I think that we can show progress is the degree to which gold is now taken very seriously by regulators, by central banks, by financial institutions, whereas previously it was a peripheral, and dare I say it, legacy asset. And it's a more liquid and efficient market. And I'll go on to explain what I mean by that in a second. But let's look at the price. The price has changed quite considerably. For decades, it didn't actually move very much. After the gold price was freed, you saw a rapid escalation in the price. But for a long time, and this was key from when the World Gold Council was formed, from 1987, it traded sideways. It didn't really go anywhere. That is key when we come to look at the value of gold mined and the nature of demand. But let's go to mine production. Now, as the market grew, so did mine production. So, in terms of volume, global volumes, 90% more gold is now mined than was mined 30 years ago. Very importantly, the value of that gold has multiplied, 435%. So the value of the market, but the value of gold mine has increased. This is all in dollar terms, I should point out. Let's look at Russia. Russia actually Russia's gold mining production is aligned with that trend. Basically, you've seen major growth in the production and by definition, major growth in the value of that mining. So now we got to the point where Russia is number 3 in the world in terms of production. It's competing with Australia. It is a major producer. But what does that mean in terms of the gold market? So I mentioned global growth. You'll see annual demand almost 100% increase, almost doubled. The value almost 500% more. So a major growth market, and I think that's well worth bearing in mind, because people often miss that when they look at the kind of quarterly or annual trends. But what has shaped that market? First of all, just to look, again, the fact this is a growth market, but very key, look at that level of demand and compare it when you look at the price. You will notice, so the World Gold Council was formed in 1987. Our mission statement was to stimulate demand. We look at the market after our first 10 years of operation, and guess what? Demand had actually almost doubled. Unfortunately, the price had fallen. This is not a classic commodities 101 supply and demand picture in terms of value. And it's key to note that, because that is key when you look at how value is created within a market from the whole supply chain. What drives that growth? Well, you'll see there's a list there. Again, income growth is the one I would highlight. Income growth within developing markets, and the developing markets which are gold's fundamental markets. That is a key factor in long-term growth. So where you have major growth in terms of economic development, and those countries can access gold, so basically they can purchase gold, that is where you see the drivers of demand. Doesn't necessarily equate to an increase in price. Now, I mentioned this idea, this is a growth and diversity market, both on the supply side and on the demand side, and it's very key in terms of how gold functions as a long-term asset, as an investment asset. So here you saw the massive rise in terms of India and China, India and China's role, the rise in investment, and this is why I say that the gold market now is a different market than it was 2 or 3 decades ago, because actually investment has been the growth component of that market. And that is key in terms of how that translates into value, basically the price-making aspect of the market rather than the price-taking aspect. And the reversal of central banks, very significant when we talk about Russia. The reversal of central bank positions on gold. For many, many decades they were sellers. They are now buyers, with the Russian central bank leading the pack. And that, somebody mentioned that de-dollarization. That de-dollarization trend among certain countries has been a key driver there. But also you've got the growth in private investment, and that is the private investment, individuals, private wealth, is also been a remarkably significant, not only in China, although in China it has been very, very, very significant, because frankly until 2004 gold ownership of bars and coins was illegal. So I could put any big number up there in terms of growth, because actually the only gold you were buying in bar and coin form in China before 2004 was probably smuggled. But that's very key in terms of how we look at markets that can be developed and actually are shaping demand. And you'll see that, and the reason why India and China are there, it's the small dots you probably can't see. The small dots are the countries that were the focus of demand in 1987. The US, Italy, Japan. They are now relatively insignificant in terms of the volume of gold bought. They are still significant to some extent, certainly in terms of the US, in terms of the investment market and driving the price. So, as I say, you can't underestimate the role of India and China. But it's key when you look at markets that can be developed, how those gold markets developed. So Russia's gold consumer market, on the other hand, has not actually been aligned at all with the growth in gold production. It's not been aligned even in terms of GDP growth and income growth. Actually, it's been a remarkably static market. That's those bars there you see are the full consumer market. 90% of that is jewellery. And to go back to what I mentioned before, in terms of where the value is created in the market, actually jewellery demand does not translate necessarily into value. So this market, in terms of growing a market, needs a more dynamic investment market. Why is that not the case? Well, you have 18% VAT on gold bullion trading in Russia, the highest, I think, globally. That will pretty much dampen any attempt to stimulate a retail investment market, but it also dampens a wholesale market. So you have no local liquidity, you have no incentive to develop gold investment within Russia. And I think that is key in terms of, as I say, having a dynamic market into which the product can be sold domestically. And I think that's basically, when you look at something like China, where retail investment was illegal, but with state sponsorship, basically all domestic production and, frankly, a large amount of gold is imported to sustain a local dynamic market. So is there potential? I mean, the question is there potential in developing an investment market in Russia? We think so. We think, first of all, you have to remove that burden, that blanket on development and entrepreneurship that basically that 18% tax represents. But if you look at Russia, and we've done some research looking at gold consumers in Russia and saying gold savers, gold investors, actually the Russian profile in terms of how gold is perceived as a stable currency, as a safe store of value, is far closer to some of those large fundamental markets than it is to certainly the US market or the European market. And that means that we think there is definitely potential there. There is also the fact that the central bank and de-dollarization is putting gold center stage in terms of gold as a monetary asset. So we think there is a potential, but it needs, if you like, change, regulatory change, and some degree of state support. Thank you.